Hey there, fellow investors. Today, we're diving into a topic that's on everyone's mind: how to protect your hard-earned money when the economy takes a nosedive. I'm talking about recession-proofing your investment portfolio. Now, I know what you're thinking. Is that even possible? Well, I'm here to tell you that while we can't predict the future, we can certainly prepare for it. Let's face it, economic downturns are a part of life. They're like those unexpected rainy days that ruin your picnic plans. But just as you'd pack an umbrella for a cloudy day, you can equip your investment portfolio to weather the storm of a recession. And that's exactly what we're going to explore in this video. I've spent countless hours researching and analyzing strategies from top financial experts, and I'm excited to share with you 5 powerful ways to recession-proof your investments. First up, let's talk about defensive stocks. Think of these as the sturdy umbrella in your investment toolkit. When the economic rain starts pouring, these stocks tend to hold up better than others. We're talking about companies in sectors like utilities, healthcare, and consumer staples. Why? Because people need electricity, medical care, and basic necessities regardless of the economic climate. For example, during the 2008 financial crisis, while many sectors took a beating, companies like Johnson & Johnson and Procter & Gamble held their ground relatively well. These are the kinds of stocks that can provide stability to your portfolio when everything else seems to be in free fall. But here's the thing, you don't want to put all your eggs in one basket. That's where our second strategy comes in: dividend-paying stocks. These are like the steady drip of a faucet, providing a consistent stream of income even when stock prices are fluctuating wildly. I remember when I first started investing, I was all about growth stocks. But as I've gained more experience, I've come to appreciate the beauty of dividends. Companies with a long history of paying and increasing dividends tend to be more stable and can provide a cushion during tough times. Think about companies like Coca-Cola or McDonald's. They've been paying dividends for decades through good times and bad. Now, let's shift gears and talk about diversification. This is probably a term you've heard before, but it's worth repeating because it's so crucial, especially when preparing for a recession. Diversifying your portfolio is like having a varied wardrobe. You're prepared for all kinds of weather. One way to diversify is by adding bonds to your portfolio. Bonds are like the calm, steady friend who's always there for you. They might not be as exciting as stocks, but they can provide stability and income when the stock market gets choppy. During the 2008 crisis, while stocks were plummeting, U.S. Treasury bonds actually gained value as investors sought safe havens. Another diversification option is gold. Now, I know gold might seem a bit old-fashioned, but hear me out. Gold has been a store of value for thousands of years, and it often shines brightest during times of economic uncertainty. It's like that vintage piece in your wardrobe that never goes out of style. But here's something that might surprise you. Our fourth strategy isn't about what to invest in, but what not to invest. I'm talking about building a cash reserve. This might seem counterintuitive. After all, isn't the point of investing to put your money to work? But having a cash cushion is like keeping some dry powder ready. When the market takes a dip, you'll have the resources to seize opportunities and buy quality assets at a discount. I learned this lesson the hard way during the 2020 market crash. I saw so many great companies trading at bargain prices, but I didn't have the cash on hand to take advantage of it. Don't make the same mistake I did. Start building your cash reserve now. Finally, let's talk about something that's often overlooked, but incredibly important: reassessing your risk tolerance. This isn't just about crunching numbers, it's about understanding your own psychology and how you react to market volatility. I'll never forget the pit in my stomach when I saw my portfolio drop by 30% in a matter of weeks during a past recession. It made me realize that I needed to adjust my strategy to better align with my risk tolerance. Maybe you're the type who can stomach big swings in your portfolio value, or maybe you prefer a more conservative approach. There's no right or wrong answer here. It's about finding what works for you. Once you've reassessed your risk tolerance, it's time to rebalance your portfolio accordingly. So there you have it, 5 powerful strategies to help recession-proof your investment portfolio. Investing during a recession can be scary, but it can also present incredible opportunities if you're prepared. By implementing these strategies, you'll be better equipped to protect your wealth and potentially even grow it during challenging economic times. Remember, recessions are temporary, but smart investing is forever. Stay informed, stay prepared, and keep investing wisely. Until next time, this is your name signing off. Happy investing. If you did, please give it a thumbs up and consider subscribing to my channel for more investment tips and strategies.